Good afternoon, everybody. Going to go over our Forex trades for today, Monday, June 27th. We actually closed out one of our correlation positions last night, the one in New Zealand dollar, Japanese yen to Aussie yen. We'll go over it in a minute. We actually finished, everything accounted for size-wise, we finished up 11 pips on this trade. It could turn into more, but with everything going on, we figured let's just take the profits. And this big move down here that you see on both looks pretty scary, but considering that we were correlated, it really wasn't scary at all. Never really down very much, more than about 4 or 5 pips on a size adjusted basis, and that was the Brexit or the UK vote. So let's go over that first in a minute, and then the economic news before we get to the trade. So we had said that it was a historic vote that was happening here in the United States. Was Thursday night when it was being announced, and on all day Friday. And I'm sure, as you know, the UK voted to leave the European Union, creating massive volatility. You know, this is what you get in illiquid markets, more volatility than probably normal. Currency pairs got hammered. Treasury bonds rallied like crazy. Yields are down to 1.47% as of right now, less than 0.1% away from a record low. Stock markets around the world got hammered on Friday. The United States was down about 3.5%. Not that bad considering other countries were down 5 to about 8%. But the selling is continuing this morning as well, not only in currency pairs, but rallying in treasuries, the yields going down, like I said, the 1.47, and equities getting hammered. Funny thing is, I don't think it's all said and done. You know, you had over the weekend Scotland and what was it, Northern Ireland, saying that they want to hold their own referendum because they feel like they don't want to leave the EU. But then I heard a rumor today that that's going to the wayside. So it's just a lot of things going on out there. How systemic this is, we don't know. But central banks around the world have created illiquid markets. If this had happened several years ago, or even several years ago, when central banks weren't so deep in the QE, markets probably wouldn't have acted as severely. You probably wouldn't have had equities in the United States down 3.5%. You wouldn't have had Japan down 8%. France down 5%. UK itself down over 6%. So not saying that things wouldn't have went down. Of course they would have went down because investors and Wall Street, they don't like uncertainty, and what this is bringing is a lot of uncertainty. But if markets were more liquid, again, I think they wouldn't have been down as much. So I think there's still probably a lot to come. They're talking in Parliament right now in the UK. Cameron stepped down. There was another gentleman that was refusing to step down over the weekend. I don't know what's going on there. So this has brought in a lot of controversy and a lot of uncertainty, and how systemic it's going to be. One can only guess. As far as the economic news today, more home here in the United States, market services PMI missed estimates once again. Now this is services, so services has been the stronger part of our economy, although it's up to about 90% of our economy, so of course it's the stronger part. We already know manufacturing is in a recession. Market services missed estimates. It says they said business optimism was the lowest seen since the height of the financial crisis, so not too good there. U.S. June Dallas Fed Manufacturing Index missed once again, coming in with a reading of negative 18.3. So not looking too good there. Like I said, U.S. Treasury yields are 1.47, less than 0.1% away from a record low. Amazingly, since the Fed raised rates in December, Treasury yields have literally done nothing but go down. And then, of course, with the UK referendum, they went down massively on Friday and going down again today. So the Fed was so wrong on raising rates, and been saying they want to raise rates in 2016. It's uncanny how wrong they were. In fact, Fed fund futures are now pricing in at 20% odds that the Fed will be cutting rates in September, a complete opposite of what the Fed has been saying that they want to do throughout 2016. So we'll see what happens there. What else did we get here? Yeah, so really that's it as far as economic news. Like I said, Fed fund futures are now showing a 20% odds of a rate cut by September. So again, Fed completely wrong. And other central bank, we've said this many times, other central bankers around the world, other countries, China, they've all been hinting to the Fed that you can't raise rates. And again, it's the only reason to raise rates is to normalize rates, not for economic reasons. And Janet Yellen in her testimony last week actually hinted at that. It's the closest thing we've come to the Fed admitting that QE, zero bound rates, or even negative interest rates don't create inflation for many different reasons, which we've gone over in the past. So we will see how the Fed reacts with what's going on here in financial markets. Anyway, so let's go over our trade. Again, we played defense. We didn't trade Thursday night. We didn't trade Friday. We weren't planning on trading Friday when the news broke Thursday night that the UK was leaving the EU. We really just sat on the sidelines, and we really believe sometimes you have to know when to play defense and really good defense. So if you play really good defense, sometimes it's actually your best offense. So we had this correlation trade on for a few weeks, and like I said, this big drop here looks scary, but when you're correlated, or you want to call it hedged, it's really not that scary. So we were short New Zealand dollar Japanese yen from 76.228, and at the same time we were long the Aussie yen from 80.127. Now they're highly correlated, but Aussie yen's more volatile than Kiwi yen, New Zealand dollar Japanese yen, so to the tune of about 20%. So of our New Zealand dollar Japanese yen size, our Aussie yen size has to be approximately 80% of your New Zealand dollar Japanese yen size, because Aussie's about 20% more volatile. So with that said, we were short Kiwi yen, or New Zealand dollar Japanese yen, from 76.228, and you can see what it did here. And last night we decided let's book it. And we covered at 71.735, picking up 449.3 pips, or size adjusted 89.8 pips, as we had 20% of our normal size. So you come into the Aussie yen, we were long from 80.17. We sold 75.202 last night for a loss of 492.5 pips. Now that's more than Kiwi yen, right? Because we made 449 here and we lost 492 here, but we had 80% of the New Zealand dollar Japanese yen size. So therefore, 80% of this 492 equals 394 pips, and again, 20% of our normal size equals a loss of 78.8 pips. Hence, we were profitable by 11.0 pips. So the beauty of correlation trading, obviously, they don't always work out, but you have, what's great is you greatly reduce your directional risk, and you also have a lot of time on your size. So you set yourself a mental stop. You say, if these things go down 30, 40, 50 pips, whatever it is, 60 pips, whatever your stops wants to be, in a combination of and including the size of the position, you will liquidate. So you can't set a hard stop, of course, because you don't want one to be stopped out while you're still in the other. But with that said, you have time on your side. So again, as this was all going on, this dip up and then the big fall down, same thing here, dip up, big fall down. We were up in this area, 10, 11, 9, 10, 11, 12, 13, 14 pips. And we were never really down more than about 5 or 6 pips. And even on this big slide down, the whole way down, I don't think we were ever down more than 4 or 5 pips. And at the same time, we were seeing ourselves up 8, 9, 10, 11 pips. So it worked out beautiful. And again, when I said you have time on your side, if it's not working out and you're not getting stopped on your mental stop, you can continue to hold. You could hold this thing for a long time. We could have continued to hold, but we decided let's take the profits and move on, especially with all the uncertainty with what's going on with the UK. We still have our pound yen correlation to Canadian dollar, Japanese yen, but we have a very small size, as we've been getting out prior to the UK referendum. So, and that is up. We're up very nicely on that as well. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action tomorrow morning. Have a great rest of your day.